Okay, great. Well, thank you all for joining today's webinar. We are going to get started right now. So today we're going to talk about crowdfunding and the work that UNCDF is currently doing. Here you have the agenda for today. We'll start with a very, very brief overview of UNCDF and the work that we're doing under the youth portfolio. And then we'll focus our discussion on the programs that we have in the Gambia and Ghana and the work that's being done there by our partners. And followed by that, we'll open the floor up for any questions that you may have. My name is Ata Sise. I'm the Youth Finance Specialist here at UNCDF, and I'll be the moderator for today's webinar. Our panelists today are coming from Strategic Impact Advisors, Thundafund, and Pezesha. And during the course of the discussion, each of them will, of course, present themselves before starting intervention. And just to give you all a very, very brief overview, for those of you unfamiliar with the United Nations Capital Development Fund, UNCDF is the capital investment agency of the United Nations for least developed countries. With this mandate and instruments, UNCDF offers last mile finance models that unlock public and private resources, especially at the domestic level, and support local economic development. UNCDF's financing models work through three distinct channels: inclusive digital economies, local development finance, and investment finance. Through the Leaving No One Behind in the Digital Era strategy, UNCDF is supporting, through its digital finance interventions, the emergence of inclusive digital economies. So before we go into our discussion today, we'd like to start with a poll with regards to youth's access to credit. Sophie, can you please launch the poll for our participants? Sophie, can you launch the poll? Yes.
You need to change the presentation mode you have chosen because we are seeing your notes.
Okay.
And we can now.
Okay. Yes, I will. So if we could just go back to the poll and give people just a few seconds to fill it out. So the question is, what percentage of youth have borrowed money from a financial institution? So we'll give you about 30 seconds to fill out this poll.
Ata, can you change the presentation mode of your PowerPoint? We can still see.
Yes, I did.
You need to end the slideshow and just choose presentation without seeing the notes.
Okay, bear with me just for a second.
If you mirror your screens, that will avoid this to come.
Yes. Please tell me if it's changed.
It's not changed yet. I think.
Oh, goodness.
Well, now it's better. Okay, and then we can see it changed now. Presentation mode. Coming up. Perfect.
Okay, so can we restart the poll?
The poll is, I think, is complete. We can stop the poll now because people have answered the question. Got 42 answers.
Okay, I'm sorry, I can't see the results of the poll. Ah, great, thank you very much. So let's see, we have 14%, that's it, 13% of youth have access to financial services. 81% said 6% access financial services, while 5% said 19% borrowed from a financial institution. And the correct answer is 81%. So thank you very much for that. So continuing with our presentation, first with regards to the youth finance portfolio, UNCDF has, since 2010, has worked on access to finance for youth, focusing on financial and non-financial services, meaning financial education. Since then, UNCDF has been able to work with financial service providers who have provided savings and loan services for over, particularly the savings component, for over 998,000 youth, of which they have saved over 24 million USD. Of these youth, over 300,000 have accessed loans with a portfolio that's worth over 70 million USD. UNCDF is now leveraging on the learnings from this initial program and is expanding its service, its reach to focus more on inclusive digital economies for youth. At this moment, our portfolio focuses on 5 country programs, of which each of these programs are funded by the European Union. Today, our discussion is going to focus primarily on the Gambia and Ghana, in which UNCDF uses a market systems-based approach for youth to be able to access better and more relevant integrated services. So before we get started, just a quick review with regards to crowdfunding, but I guess we can launch the poll for our participants to get a sense of who is familiar with crowdfunding platforms. Sophie, can you launch the poll? Thank you. So please tell us what percentage, no, this is the first poll. We want the second poll. The poll on crowdfunding, please. So let's continue with our discussion while we wait for the poll to be launched. So according to the European Union, crowdfunding is part of the broader universe of financial innovations enabled by technology advancements, also known as fintechs. Thank you very much, Sophie. So let's go ahead and start the poll. The question is, what is your experience with crowdfunding? Just 2 more seconds to answer. Okay, great. So according to the results, 63% of you have never used a crowdfunding platform, while 33% has invested in a project on a crowdfunding platform, and 4% have raised funds as an entrepreneur through a crowdfunding platform. Great. Thank you for that. So to continue with our discussion, just to give you a brief overview of the types of models that are out there, we're looking at several models. To start with, there's the donation-based model, which basically focuses on individuals being able to donate funds without a return, of course, to platforms or to entrepreneurs through a particular platform. Then there's the reward-based model, where individuals are able to provide funds and receive something in return. This could be a product that the investor is developing. It could be in the form of a T-shirt or some other type of reward that the individual would receive. Then there's equity-based, where the individual would receive a return on the investment that they provided. And then there's the loan-based, lending-based model, in which the individual would provide the funds for a return, and it would basically be a loan to the entrepreneur through the platform. And now let's go to our partners so that they can tell us more about the work that they're doing in the respective countries. We'll start with the Gambia, where we have the Job, Skills, and Finance Program that was launched in 2018. And again, here UNCDF is using a market systems-based approach, where we are working at the macro level, for example, supporting the Central Bank of the Gambia with their national financial inclusion strategy, along with other initiatives. At the meso level, it focuses on data collection and ensuring that data is available to provide to policymakers and regulators data that they could use for policymaking and improving the regulatory environment. And then at the micro level, we have several initiatives that focus on digital financial services, such as crowdfunding. Here we're working with our partner, Thundafund. And Matt, I'm going to pass the floor over to you so that you can talk about Thundafund, the work that you do, and the model that you currently are using in the Gambia. Matt, over to you.
Thank you, Atta, and hi everyone. It's a real pleasure to be here. So I'm Matt. I'm one of the directors of Mchanga and COO of Thundafund. So I'll give you a quick history of these two native African platforms. Mchanga was started in Kenya in 2012. It was following the culture of Harambee in East Africa, where people come together to contribute funds, which is very similar to Susu in West Africa. And using this culture, as well as the rise in mobile payments and social media, we developed a very low-tech product that relied on SMS and USSD to build a platform that became the largest donations-based crowdfunding platform in sub-Saharan Africa. To date, we've raised over $8 million. We've had over 700,000 users of the platform. And largely, these are Kenyans giving to Kenyan campaigns such as medical bills, funeral costs, local organizations, and social causes like that. And starting at a similar time, we had Thundafund launching in South Africa with a slightly different model. So instead of donation, as Atta touched on, this is a rewards-based crowdfunding platform. So instead of giving donations, people give in exchange for project-level rewards, which could include experiences, products, services, or even appreciation. And in 2019, Mchanga and Thundafund decided to partner together for the launch of Thundafund. This pilot was successful. We had over $60,000 raised from our first 16 projects that went live. we've continued to grow this new market. And then in 2020, to further strengthen the partnership, we worked with UNCDF, and we've actually just launched in the last month in the Gambia. So next slide, please. The Gambia will be offering both donation and rewards crowdfunding, but we're also really excited to be working on a revenue share model so that we can also invite people to invest in local entrepreneurs on the ground. And so I'll just take you through an example of how this model can work. So here we have Fatou. She's a Gambian entrepreneur, an MSME. Her business is to take traditional fabrics and to turn them into clothes for reselling. Now she's looking for a $500 investment. Unfortunately, like many businesses, she doesn't qualify for an equity investment. Her business is too small, there's no valuation, there's no exit strategy. And so really she's only left with the option of debt. And because the risky nature of her business and the volatile market, debt requires her to pay the same amount every month, regardless of how well the business performs. So this also is not the option that she'd like to go with. Whereas in a revenue share model, repayments will depend completely on sales. So after receiving a $500 investment, Fatou has promised a $650 return, and this will be paid over a series of months as a 10% monthly revenue share until the final amount has been repaid. So this could be 6 months, it could be 12 months. It completely depends on how well the business performs. So it's a quasi-equity type model. Now, if we look at the investors, in this example, we have 10 investors from across the world, each pledging $50 towards this total $500 goal. Now, over the time, every month, as we get this 10% of sales, these investors will receive according to how much they put towards the project. They will be repaid until they receive the full $65 back that they were promised. And so if we consider individuals maybe in Europe, America, or anywhere in the world where exchange rate, interest rates are very low, when they invest in this type of business, even considering the exchange risk, the inflation risk, it's still a very lucrative return for them. And it allows them to invest in the livelihoods of African businesses. And then because we're working with quite risky, smaller businesses, we've introduced partners into this same model so that in this case, Fatou is buying original fabrics from a mass importer. So Thundafund would partner with this importer of fabrics. They would conduct a due diligence on this partner, and they would assign them a risk score as well as a maximum investment amount that they can receive. Now, the job of the partner is to be an intermediary between the platform and the entrepreneur. So the partner would select their best entrepreneurs to receive investment. They would help them in setting up the campaign. And after the campaign has ended and the money's been received, they would follow up with these MSMEs for reporting and collection of the funds. In exchange for this, these partners will receive a commission, and as their reputation improves, so will their ability to raise more money so they can actually increase their earning potential through this program. So our hope in the Gambia is to build a network of different partners who can identify the 8,000 MSMEs that we are targeting for this program. So altogether, go on, please.
Sorry. So you've already started your activities in the Gambia. Can you tell us how you've been able to identify local partners and entrepreneurs? What is the strategy that you use for that?
Sure. So obviously COVID has changed our plans a bit. So without being able to be on the ground, we've focused mostly on online tools. And so through social media, we've identified different partners we'd like to work with, different campaigns. We've been accepting both NGOs and business owners to create campaigns for themselves. And we've had 2 online webinars where we've gone through the whole crowdfunding process to train these potential campaigns on how it works. And then of those, identified the most promising to work closely with, offering them matching funds also So far, we have 3 live campaigns. We have around 30, 40 in the pipeline that we're working with to finalize their campaigns. And through this, we'll be learning about each of their businesses, NGOs, in a way that we can help and support them, so that when we're able to get on the ground, we can continue building these relationships with the partners, continue learning about these potential campaigns.
And what is the status of the program right now? Granted, you've just started. What is the status as of now?
So we had quite a lot of success through our digital marketing. We reached over 400,000 people in terms of being able to see our ads. We had 72 entrepreneurs and NGOs trained. We've had 40 actually create accounts, 3 are live, which I believe have raised $160 so far. So we're really working through the funnel. At the moment, we've been focusing on creating that awareness. And as we get success stories, we're going to use those to encourage the next groups to come forward and have confidence they can actually succeed.
Great, thank you very much, Matt.
Thank you.
So we're going to move on to our next speaker, Tala from Crowdfrica. Tala, can you tell us about your consortium and the model that you currently have in place?
Sure, thanks, Atta. And let me start also by thanking UNCDF for this opportunity to showcase our work, and as well to all of you for your time and participation this morning. So today I am going to talk about how, as Atta mentioned, the strength of our consortium of 4 partners has made this project possible, highlighting 3 core factors. So the first is how a historically non-entrepreneur focused crowdfunding platform can successfully make the shift to incorporate entrepreneurship. The second is mobilizing and training entrepreneurs. And lastly, I'll touch on collaborating with financial service providers to offer financing to our entrepreneurs. So let me begin by introducing our partners. As I mentioned, that is really where the strength and success of our project is grounded. So Strategic Impact Advisors, the company that I work for, is a women-owned Washington, D.C.-based digital financial services consultancy firm. While we are based in the US, the majority of our work is concentrated in sub-Saharan Africa, with a particular focus on West Africa. I'm based in our Accra office, as well as Eastern Africa, in particular, Uganda. We do focus in 4 primary areas. So the first is digital financial services, second, digital agriculture, thirdly, women's economic empowerment, and lastly, financial inclusion. So our crowdfunding platform partner for this project is Crowdfrica, which is a Ghanaian-owned crowdfunding platform that was founded 3 years ago. They have historically targeted health and education projects, particularly around fundraising for surgical operations for individuals, health insurance registration, as well as school supplies. Our third partner is Kumasi Hive, which is also a Ghanaian-owned entrepreneurial incubator space in Kumasi, which is the capital of Ghana's Ashanti region. Kumasi Hive was founded in 2016 and offers a number of tech-related courses, as well as acting as a business accelerator and incubation space. Our fourth and final partner is iCode, which was founded in 2015, and similarly to all the other partners, is also Ghanaian-owned. It has a very similar model to Kumasi Hive in that it is an entrepreneurial incubator space, business accelerator, and has a particular focus on closing the gender gap in tech for women by offering a number of tech-related courses specifically focused and geared towards women. So let me dive into the meat of what I want to discuss today. So to the first point, how Crowdfrica, as a historically non-entrepreneur focused crowdfunding platform, can successfully, make that transition to incorporating entrepreneurship. So the answer to this question is actually quite simple. It's by leveraging the network of the incubator hubs. So from our market research with entrepreneurs, we found that 61% had never heard of crowdfunding before. Now, the remaining 39% that did indicate that they had heard of crowdfunding before, we pushed them a bit to get a definition or a description, and they couldn't quite give us an accurate one. It should also be noted that the community members that we interviewed for our market research had also never heard of crowdfunding before, almost all. So this obviously indicates a strong need in Ghana for sensitization and education around crowdfunding. So our assumption here is that we are working with entrepreneurs and a donor base, at least in country, domestically, that doesn't really have a strong baseline understanding of what crowdfunding is. Now, Crowdfrica could make this transition to entrepreneurship alone, likely through a broad-based information dissemination or marketing campaign throughout Ghana. However, by leveraging the network of the incubator hubs, we are able to do this in a much more targeted and efficient way, especially to be able to kickstart a pilot within 2 months of our project launch, as we were doing for this project. So drawing from the hub's existing entrepreneurial networks is actually very critical here. And Atta, if you could please go to the next slide. Great, thank you. So the second piece I wanted to discuss with you today is the training and mobilizing of entrepreneurs. So in parallel to being onboarded to the crowdfunding platform, the entrepreneurs will also go through an 8-week intensive training program. So the first 4 weeks is focused on the fundamentals of crowdfunding, which works to close that knowledge gap, about crowdfunding that I discussed previously. We'll also introduce entrepreneurs to what crowdfunding is generally in an SME and sub-Saharan African context, how to pitch effectively on a crowdfunding platform, as well as obviously practical lessons on using Crowdfrica. So once they complete the fundamentals of crowdfunding section of the curriculum, that first 4 weeks, the entrepreneurs will have a good baseline understanding of crowdfunding. They'll also have solidified their pitches and their budgets to upload their campaigns on Crowdfrica. So we're staging this in between the curriculum because we do, as I mentioned, want the entrepreneurs to have that baseline understanding, but also have access to the Entrepreneurial Hub resources in order to make their pitch as effective and engaging as possible. So the remaining 4 weeks will introduce the entrepreneurs to the fundamentals of entrepreneurship and basic business skills. So they will learn how to create business models, market research analysis, introduction to design thinking and the lean startup method, as well as cash flow and financial analysis. So we hope by the end of this 8 weeks, the entrepreneurs will, one, be able to obviously increase their capacity to effectively use their funding that they receive from the crowdfunding platform. And secondly, make them more competitive loan applicants. So UNCDF does have a strong financial inclusion angle embedded in this project. And to that end, we are exploring collaborations with financial service providers to design a loan product that accommodates financial institutions' risk levels and also gets the entrepreneurs the level of exposure they need to be competitive loan applicants. So I think I'll pause there because I know, Atta, you have some questions for me.
Yes, so let's go. If you can talk about some of, you mentioned some of the findings from the market research,
Sure.
And if you can talk about where you are with regards to the work that you're doing in Ghana. And at the same time, it would be good if you can talk about, more specifically, discussions that you've had with the financial service providers and your findings there.
Sure. Thanks, Atta. So we just closed our market research. So we are now in the phase of using that market research analysis to inform our marketing plans, as well as making some adjustments to the Crowdfrica platform, like I mentioned, to be more relevant for the entrepreneur group, given that they haven't historically targeted entrepreneurs. So I can give you some key points, interesting facts from our market research. So one of the things is when we interviewed community members, we found that their primary needs for responding to COVID-19 was hygiene supplies, as well as sensitization and education. Interestingly enough, these were also the two most common funding, community members would most likely be willing to fund projects related to these two areas as well. So PPE for health workers, PPE for non-health workers, as well as sensitization and education campaigns. We are finding that the average financing need thus far for entrepreneurs is between 5,000 to 10,000 Ghana cedis, or around 870 to 1,740 US dollars. So yes, that's kind of a brief overview of some of the key facts from our market research. And then now I can maybe go into our financial service provider collaboration.
You
also,
have 1 minute.
Sorry?
You have 1 minute.
Okay, I'll try and talk fast. So during our market research, I spoke with 10 financial service providers, those being banks, microfinance organizations, and a fintech. So we're surprised to know that the interest in collaborating for this project is actually quite high amongst financial service providers, even though crowdfunding is relatively nascent in Ghana. So I think the reason for that is, one, they see it as a source of new customer acquisition. And secondly, it's also a means of reaching a segment that has historically been perceived as too risky to consider. So during our marketing research, we also asked entrepreneurs if they had attempted to access financing from financial institutions previously. almost all indicated that they had, and almost all were denied because one, they did not meet the financial service provider's requirements, or two, they did not have adequate collateral. So with this in mind, we are now trying to create a model that accommodates both groups' needs. And we went back to financial service providers and asked them, so if I was an entrepreneur and I came to a financial service provider to apply for a loan, and I could demonstrate on a crowdfunding platform that I had already received some level of funding from individual donors, would that make a difference in my appraisal process? Nearly all the financial service providers indicated that it would, with two caveats. So one, they would still need to do a formal appraisal using their internal processes. And secondly, the loan would have to be facilitated through them and not through the crowdfunding platform. So with this in mind, the approach that we are thinking of taking is having Crowdfrica act as the intermediary point between the entrepreneur and the financial institution. So what that means is, again, if I was an entrepreneur on Crowdfrica, I would see an option to apply for microfinance. That would then lead me to a loan questionnaire, which I would complete, and that would be sent to my selected financial institutions. The financial institution would do an initial yes/no appraisal. Should the answer be yes, the financial institution would engage with that entrepreneur offline and do a more formal appraisal using their internal processes. I know I'm out of time, Ada, but maybe one more point. Something else that we're trying to incorporate here is how we can de-risk the entrepreneurs who are obviously historically seen as a risky segment to provide financing to by financial institutions. So one of the models we're trying to use is having some of the donation-based funding that the entrepreneurs receive used as cash collateral by the entrepreneurs, from which they can then apply for a loan from financial institutions. So thank you very much.
Thank you, Tala. I'm sure our participants will have questions for both you and Matt. So hopefully you will be able to go into more detail with regards to the models, especially with regards to leveraging those donations as collateral for the entrepreneurs.
Sure.
Thank you. Next, we're going to move over to Pezesha. So Sheil, I'm going to pass the floor over to you. Please tell us about Pezesha and the current model that you have.
Thank you, Ata. Hello, everyone. I hope you can all hear me well. My name is Sheil Shah. I am the head of strategy and operations at Pezesha. A little bit of background about me. I have helped grow a few different types of small businesses in Africa, and I've built finance products for the underserved in Africa. I'm someone who is motivated by doing work that contributes to fairness and equality in the world. And so I'm very excited to be a part of this conversation today. I'm going to start by talking a little bit about Pezesha, and then I'll move on to what we're doing in Ghana. So who is Pezesha? Pezesha is a digital finance ecosystem headquartered in Kenya. Our focus is on the underserved micro and small businesses in Africa. We all know that there is an urgent need for job creation right now. And if you consider that Africa's working age population is expected to reach 1 billion people over the next 10 years, that's by 2030, you have this Herculean problem that everyone is worried about. MSMEs, or micro and small businesses, are the lifeblood of our economies in Africa. They make up 70 to 80% of employment on the continent. So the only way we can really begin to seriously tackle this mammoth issue of unemployment is by developing solutions to support the underserved MSMEs. And one of the biggest problems that they continually face as impediment to their business resilience and their business growth is access to finance. Our mission at Pezesha, which began about 3.5 years ago now, is to have these underserved communities financially included. The word Pezesha means financial empowerment. We have to date completed over 70,000 disbursements and disbursed over $1.5 million to underserved people. So how do we go about doing what we do? What is our model? How we realize our work is through our crowd lending marketplace. Similar to other crowdfunding models, through our technology infrastructure, we connect investors or lenders who may be individuals or institutions. We connect them to small businesses requiring financing support. But how is our model different? We sit across the operations of the entire lending value chain, and we differentiate ourselves across three main aspects. And these are highlighted in the box with the dotted lines that you can see in front of you. Number one, the alternative credit scoring. This is the vetting and evaluation of small businesses. That is, we do the credit assessment piece within the lending value chain. And it is mainly a question of what data can we get our hands on to draw useful insights. And I'm happy to talk more about this in depth. Number two, the matching of investors' funds to small businesses requiring financing. Unlike other models where investors will choose who they want to fund, we take that investment decision away from investors and choose the businesses for them. Now, if you think about the North Star metric for a typical crowdfunding donations-based platform, you'd probably be thinking about the number of businesses or projects supported. For us as a crowd lending platform, one of the key metrics to watch is the return on investment that lenders receive. Because if they can receive positive returns in line with the perceived risk of the investment, that is then tangible proof that the business model is working. That is, the small businesses are being supported and they're able to pay back well. And so the investors will come back and fund more businesses, adding to the sustainability of the whole model. The matching of investors' funds to businesses requiring financing is done by our proprietary algorithm. Number three, financial education of the entrepreneurs. We believe in a holistic solution because finance is only one issue that is faced by MSMEs. So how do we go about financial education of the MSMEs? We carry out financial education by offering MSMEs access to modules via our app. They will learn about topics such as debt management, business finance. We give them tips on COVID-19 topics such as how they can reach more customers. We teach them about the importance of recording transactions and so forth. Education also happens when MSMEs go through our acquisition process in the questions we ask them and the challenges we pose to them during the application process. Ultimately, with our financial education, we are empowering MSMEs to make better decisions and take better actions. Those three aspects combine to form our crowd lending model. Now, if we look to the right-hand side of this graphic, we have an example of one of our approaches to acquisition that also makes us different and adds to the sustainability of our model. This is our approach with value chain partners or supply chain partners, whereby we partner with suppliers and technology service providers to lend to the merchants that are part of their networks. This creates a fantastic win-win solution for all, and I'm happy to talk more about this approach too. When all these come together in one holistic solution, we believe we then have a crowd lending model at Pezesha that is unique, that is robust, and that is sustainable. So what are we doing in Ghana? The formal sector MSME funding gap in Ghana is $5 billion according to the World Bank figures. The potential demand from the informal sector is another almost $5 billion. So these are the guys who are the lifeblood of the Ghanaian economy, and this is the problem we're trying to solve in Ghana. With the support of the UNCDF, we're introducing our crowd lending marketplace in Ghana. We're beginning with a 12-month project, at the end of which we shall be reaching 10,000 small businesses in Ghana and providing financing to at least 1,000 of these. We shall be tapping into investors, local individuals, institutions, and diaspora who want to not only support the market, but also earn a return on their investments. We're initially focusing on the Ashanti and Western regions in Ghana to begin with, which are two of the regions with sizable populations and economic activity in Ghana after the Greater Accra region. The Ashanti region, for example, has a vibrant motor vehicle and motorcycle repair industry, one of the largest in Africa. And the Western region is known for its mining and shipping activities. It's been about 1 month since we began, and we have already begun the initial groundwork. The initial groundwork has involved customizing our technology to the Ghana context, including working with local operational partners to help us with payments, communications, verification, identity verification of individuals and businesses, and so forth. We've also been carrying out market research to better understand the Ghana market and the characteristics of the individuals and the businesses. And we've been learning and tweaking our business model to work in the new market. Soon, we shall be focusing on acquisition strategies and working with different types of partners to help us reach our target customers. Thank you. Over to you, Atta.
Thank you very much, Sheil. Now, you mentioned alternative credit scoring, which I'm sure participants will also have questions on. Can you please tell us more, share more about how you go about how your alternative credit scoring model works?
Yes, sure. Let's talk a little more about this. So MSMEs have little to no collateral and no organized business data to build and monitor their credit scores. And we cannot rely on traditional methods for scoring, such as an individual's credit history. Because unlike the West, where every person begins at a very young age to build a credit history, most individuals in Africa have no such credit history. So it becomes a question of what data is available and what data can we collect to get better insights about a person or business. And then how can we use that data to draw insights about creditworthiness? So what are some of the things we at Pezesha do with regards to data? We use a variety of different data sources to build our scoring model. For example, for verification, we do use electronic means of verification, such as verification against the national identification databases, verification against tax databases, verification against telco company databases. We also use mobile money statements to draw insights, insights about indebtedness of the borrower, insights about spending patterns, are they frequent gamblers, insights about frequency and consistency of their inflows, and so on. We also have questionnaires posed to entrepreneurs to ask them about their businesses, their cash flows, their use of funds, their own capital, their own wealth, and these are all added to our holistic scorecard. Another very interesting source of information is transactional data from value chain partners. And this relates to our supply chain financing or value chain financing proposition, briefly shown in the diagram on the right. So we analyze transactional data to really understand important factors that we build into a scoring model. And we look at things like, how recent are the transactions? How long the business has been trading with the supplier? How often does that merchant transact with the supplier's products? What is the average transaction amount? What is the spread of that average? How have the transactions been growing? How have the transactions been growing month on month? So we combine all these data points and build a scoring model that is iterative. This means that it is constantly improving the more data that we gather. And for small businesses, it means that they develop a stronger credit score over time. And thereby, they're able to unlock higher credit limits and business growth. Thank you, Atta.
Thank you, Sheil. It's very interesting. And just one more question for you, or at least I should say a two-part question. Can you talk a little bit more about your supply chain partnerships? Maybe provide an example, and also what is the primary type of entrepreneur that the platform attracts? So what is the profile of your target customer?
Yes, sure. Yeah, so I talked about our partnerships approach briefly. That's the other thing that makes us different, is our approach with value chain partners or supply chain partners. Here we partner with manufacturers, distributors, or technology service providers that work with networks of small business merchants. We see this as a very important component to make our model robust, sustainable, and scalable to be able to reach the tens of thousands of underserved MSMEs. So let's take an example here. A merchant, let's say, who has a retail shop, places an order with a supplier and wishes to pay on credit. Pezesha is immediately electronically notified of the order, and a payment is made automatically by Pezesha directly to the supplier. So the supplier who has received the monies for the order is happy to deliver or release the goods to the merchant. Then over a reasonable period, once the merchant is able to realize sales of those goods, the merchant pays Pezesha the principal amount and a fee for that credit facility. So it's a fantastic system that results in a win-win for all. You know, the merchant, the retailer, is able to buy goods on credit, increase its sales, and build a more loyal customer base because it'll be able to offer a bigger variety of products and also ensure that the shop is fully stocked. The supplier, who has also increased his sales because it has sold more than what the merchant would otherwise be able to afford without the credit facility. And it has been able to do so at zero credit risk. And Pezesha is able to offer financing via its marketplace infrastructure. And it's able to do so at a reduced risk to investors. So we're already working with such value chain partners in Kenya and now looking to adapt this approach in Ghana. Atta, sorry, would you mind repeating the second question? Was it about the primary type of entrepreneur we attract on the platform?
Yes, exactly.
Sure. Yeah, so I shall give you an example of a small wholesaler named Joseph in a small town called Kahawa near the northern border of Nairobi County. He has been selling baby wipes and baby diapers to small retailers and individuals in the area. He went to his bank requesting a loan for about $2,000 because he couldn't keep up with the demand for his products. He had been in operation for 3 years and his business was healthy and profitable. But his bank flogged him off by telling him to come back after 3 months after showing more traction. In other words, his bank was just not interested in lending to him. And this is the problem across the continent because banks see small businesses as too costly to serve using their conventional banking channels. And those at the bottom of the pyramid are thought to have low potential to really create value for the banks. So our target customer is this sort of MSME, micro or small business. You know, they're private companies that consist of usually a sole proprietor who offers a good or service. They're mostly informal. They don't keep digitized records of their business operations and financials. You know, their monthly revenues would range from small amounts in the region of $100 a month up to $10,000 at the higher end of that range. They experience cash flow issues regularly and do not have the luxury of access to finance that large sustainable businesses do. So we are mostly sector agnostic, but we do consider that the service sector comprises the largest collection of entrepreneurs, and specifically the retail sector, that fit the profile of the businesses we look at. And that's the type of entrepreneur that would be our ideal target.
Great.
Thank you,
Thank you very much, Chio. And thank you to the rest of the panelists, of course, for sharing your models and how you're working in Ghana and the Gambia, respectively. So we're going to pass the floor over to panelists. So we understand there are a number of questions. So we're glad to see that there's a lot of interest in this webinar. And let me just note that this is part one of a series of webinars that we are planning to have primarily on crowdfunding. So for this first webinar, we wanted to share some of the initial work that we're doing in the two countries. And the following webinars will focus more on some of the results that we have, based on the implementation in both the Gambia and Ghana. We'll also have a session on regulation. I know this is a question that's quite important for a lot of our panelists, as well as for UNCDF and our partners. And another session will focus on some of the final results that we have. So we'll have these sessions over the course of time, so going into 2021 and 2022, if we don't cover all of the topics. So let's start with our first panelist, Matt. Ariana, can you read the question that was addressed to Matt, please?
Yes, sure. So Matt, for you and maybe also the other panelists could also answer. So first question is the following. How are the revenues of SMEs monitored to determine repayments? Is this your responsibility?
Sure, and thanks for the question. So the monitoring is done through our partners. It's in their interest that repayments are done. So usually these partners will already have an existing business relationship to the MSME. So really that's how we're monitoring, and then based on those reports is how much we expect to collect. The faster they repay and the more they repay, the better it is for the partner in terms of earning a commission and being allowed to start new projects on the platform.
Thank you very much. Next question for, I don't know if the other panelists would like to complement from their perspective.
Yeah, thanks, Ariana. Maybe I'll jump in here and say, from our side, I think it's more applicable about ensuring that the entrepreneurs are actually using the funding for what they indicated on their campaign pages. So one of the things that we're doing with the training program is also assigning individual mentors for each entrepreneur. So that mentor will be responsible for ensuring that the entrepreneur is in fact using the funding for growing or scaling their business. Thanks.
Thank you, Tara.
Yeah, for us at Pezesha, it's absolutely the responsibility of Pezesha to follow up on repayments from the entrepreneurs. And the way we do this begins right at the start when we work with the entrepreneurs to work out, what is workable in terms of repayments for them. And then it's our responsibility to work with them after the disbursement has been made to make sure that we're supporting them in the best way possible for them to make those repayments. The investors on the platform do not have any association directly with the entrepreneurs. We fulfill that responsibility on our end.
Thank you all. So the second question still for Matt, but I guess the other panelists can also answer. Any reason for adopting revenue share model and not reward or donation based? How sustainable is your model beyond grant funding from UNCDF?
Sure, so just to clarify, we are offering both donation and rewards based, and that's where we have the most experience to date. But we're also developing this revenue share because it's more inclusive. So if you think of the type of businesses that can benefit from offering rewards, they're quite limited, especially when you look at a country like the Gambia, especially if you have a physical product and you want to ship it, they're not as appropriate for the type you might see on Kickstarter, whereas a financial investment can be done completely digital. And then your second question on sustainability, Yes, absolutely. Sustainability is a very core part of the model. In fact, Mchanga in Kenya is completely self-sustaining. Thundafund is operational in free markets, and as we expand, we're not looking at sustainability just in one market, but across the spectrum. The more we grow, the more able we are to benefit from economies of scale and actually reduce those costs. So, absolutely.
Thank you very much. Sheil, maybe you want also to answer since your platform.
Yeah, so ours is a crowd lending platform. So it's not a donations-based one. It's sort of a mix between a donations-based, somewhere in between a donations-based and a revenue-based model. But at the forefront of our minds is how can we create a sustainable model, and that's why we've come to the lending piece. We have to ask ourselves, how can we build a model where all the parties, both sides of the value chain are winning? On the investor side, are they able to realize the returns that they expect for the monies that they put in? For the entrepreneurs, are they able to receive the funding quickly when they need it on a regular basis? And the way we see that is if we're able to make it work on both sides of that equation, then we already have a sustainable model that's ready for scale and expansion across the continent.
Thank you very much. So maybe next question. I saw there are similar questions, so it's worth asking this. How do you disburse funds raised to MSMEs, especially those in LDCs? Do you work with any payment processor? I think it was for Matt, but also other panelists can, the other panelists can also comment on that.
Thank you, Ariana. Yes, so we are in the process of opening a local bank account, and we'll be discussing through our partners for those who don't have formalized bank accounts. And we hope to really work in the mobile payment space as well. So in Gambia, we've been speaking to QMoney, and in terms of banking, we have a microfinance and also EcoBank. So those are the solutions we're looking for, but feel free to reach out. We're open to working with different providers there.
And Ariana, maybe from our side, so Crowdfrica is actually currently negotiating an agreement with Emergent Payments to be our payment processor. So that partnership will actually do two things. One, Crowdfrica will open a bulk payment account with Emergent. And then two, we're also designing a USSD-based donation solution for those who might not have access to internet. So the bulk payment disbursement, that will be kind of a manual disbursement done by Crowdfrica through bank account or mobile money directly to the entrepreneur.
For us at Pezesha, absolutely. If we think about who the entrepreneurs we're targeting are, most of them will have access to mobile money. Very few will have access to banks, but some of them will do. We cannot do the payment integrations ourselves in-house, so we do need partners on the ground to assist us. So we're working with a partner called Spectra in Ghana to help us with the payment piece. And we're almost done with integrations and should be ready to launch early next week.
Thank you very much. There is a specific question for Matt about local partners you work with in the Gambia. And if possible, a link to tap to see the work you have been doing so far in the country. I think this is a question from the Gambian Youth Chamber of Commerce, and they would be interested to see how to be involved in identifying entrepreneurs.
Yes, thank you. I'm very happy to have a question from the Youth Chamber. We've spoke in detail with the Gambia Chamber of Commerce already. they're very much supportive of the work we're doing, as well as Gambia Angel Network, the YAP program, the Woman Boss. So there's a lot of partners we've already engaged, and I hope to actually be in the region fairly soon so that we can develop these conversations further. But definitely we're keen to engage the youth chapter soon.
Thank you very much. And then for all the participants, we'll be sharing the contacts of the panelists. So if you have any follow-up questions on the specific project, you can be linked directly with them. So following up with the questions, I think, yeah, I saw many questions around again, user acquisition. How do you get small businesses to register on the platform? And how do you assure returns for investors? I think it's for all of you. If you can maybe share a few insights.
Sure. So Ariana, from our side, we're doing kind of a mixed marketing approach. So as I mentioned during my presentation, leveraging the entrepreneurs' existing networks leveraging the incubator hubs' existing networks of entrepreneurs is very critical here for us. So they are doing that through targeted marketing campaigns, also direct outreach to entrepreneurs that they know would be applicable for this project, as well as community outreach as well. So those are the models that we're achieving. It's a mix of in-person, direct outreach, as well as social media marketing.
Yeah, I'd like to echo that. I can't add too much. I think you'll find that all crowdfunding platforms are quite complementary to existing networks that exist. So working with the chamber, working with financial institutions, working with different bodies and even cooperative societies to reach these entrepreneurs, which is why our model is very much based on the partnership approach. And we even want people to work together because we want to figure out crowdfunding in a local setting and how it best works. And so this is not going to be just one-on-one, it's going to be done as a community.
Yeah, we at Pezesha are taking a similar approach when it comes to attracting entrepreneurs who want to apply directly onto our platform. So we are trying to reach them through various channels: digital marketing, search engine marketing, and social media marketing, SMS marketing, referrals, having agents on the ground. And these are some of the strategies we're going to test over the next few months. The other one that's very key for us is the partnerships approach. And I'm talking about a couple of partnerships. One is partnerships that have these schools of entrepreneurs or hubs of entrepreneurs, for example. How can we work with them to support the entrepreneurs? And the other interesting partnerships approach is what I talked about a little bit earlier. How can we work with supply chain partners or value chain partners? If you think about a manufacturer within Ghana, they probably have access to 10,000 merchants, or a few thousand merchants at least, that they serve across the country. And all these merchants will need financing support to grow their inventory and grow their sales. So how can we build, how can we integrate with these supply chain networks? How can we make the process seamless for the entrepreneurs to be able to access the credit exactly when they need it, instantly, and be able to also repay, when their sales are increased?
Thank you very much. Next question is specifically for Tala, but I guess it's also for the other speakers. Does the online approach allow you to reach out to many entrepreneurs? I think the question is relevant, especially in this time of COVID and social distancing. So I'll invite also the other speakers to comment.
Great, thanks, Ariana. I think actually this is very closely to my link to my previous answer, which is that we are doing digital marketing as well, but it's also direct outreach to entrepreneurs that the incubator hubs are already aware of. So that's very key for us here. Yeah, I think that would probably be my answer. I would say the other thing is that with COVID in mind, some of the curriculums may have to be conducted remotely, some of the trainings. So one of the key outputs that we're hoping to create to ensure sustainability after this project ends is for the hubs to actually design an 8-week curriculum that is completely recorded. So this is something that could be scaled beyond, the Ashanti and Western regions in Ghana to across all of Ghana, and can be something that might be able to be offered on the crowdfunding platform as well. So that's a model that we're trying to use for this project.
Yeah, I can say digital marketing has been quite effective. It's very good at targeting. It, of course, does have its limitations. In the Gambia, we're struggling with the high cost of internet, so that does exclude quite a number of people. And I'd say it allows us to get the low-hanging fruit. So that would be the people in urban centers, people who are going to offices, and also our partners. But when it comes to trying to reach beyond those, trying to get into more rural areas or excluded regions, it becomes much more about locally designed low-tech technologies and having a USSD or SMS solution as well.
Yes, I fully agree with Matt. For us, digital marketing has worked in Kenya. We have yet to test it in Ghana, but in Kenya, lots of people are on Facebook, for example, and we're able to reach lots of entrepreneurs there. Search engine marketing as well, where people just go for search on Google, has worked for us as well. But we have to be mindful that that limits our reach, because there'll be lots of people, as Matt mentioned, who will not have access to the internet or not be internet savvy. So it becomes a question of how can we reach these guys? And that's where we have to test all these other different channels, especially in the early months, to see how we can reach these guys who might not have access to the internet.
Thank you everyone. Another question is about risks. Maybe you can share one risk that you face or you might face during the implementation.
I can start. Of course, regulation is something that keeps coming up, and it's really important in order for crowdfunding across Africa to expand. And so the regulatory risk is quite high. We've actually been working first in South Africa to develop the framework for the investments we're doing, to make sure it's completely legally sound there. And then we'll be working with legal teams in the Gambia to also ensure compliance. And I do believe there's some work, or at least conversations happening between various organizations in that space. But definitely regulation is a risk that could either make or break crowdfunding in a big way across the continent.
Yeah, and maybe from our perspective as well. So one of the reasons why we're trying to collaborate with financial service providers is if entrepreneurs are not able to meet their full ask on the crowdfunding platform, they could supplement it through, and given that they are historically seen as a pretty risky segment and lack the collateral necessary. So something that I touched on in my presentation is how can we use the crowdfunding platform as a tool to de-risk these entrepreneurs? So one of the ways that we are exploring that is by securing some of the donation-based investment, possibly as cash collateral, from which entrepreneurs can then apply for a loan. That, and also in combination with the 8-week training curriculum, which will prepare them with all of the business documents and the insights that traditionally financial institutions obviously look to during their appraisal process. So we are relying heavily on that curriculum and really preparing the entrepreneurs. I should mention also that another thing in that curriculum is the financial service providers have expressed significant interest in joining in the training, specifically for a module related to digital financial literacy. So the financial service providers will be offering their support in what it takes to be a competitive loan applicant, etc. So that's something, that's a few ways that we're trying to mitigate that risk of entrepreneurs not being competitive loan applicants.
Yeah, I'd say for us, I mean, there are lots of risks within the crowdfunding platform. You know, the technology itself, there's data risks, for example, there's risk of fraud. But I think a lot of these are, for us, are things we know we can do something about. The one that's a little bit more tricky and a little bit more long-term is the regulation risk that Matt mentioned. You know, that's something I think we'll need to get our head around, and we've been talking about coming up with short-term, medium-term, and long-term plans about how we're going to be compliant with different types of regulation in Ghana and more widely. So that's something that keeps changing as well, and something to watch out for. But from what I've seen from the research that we've done in Ghana, quite excited about the regulations in Ghana being quite forward-looking and being quite, they seem to be quite receptive to the needs of the ones who are actually being served, so the MSMEs. And they've introduced things like the Payment Systems and Services Act, you know, and they continue to do so, introduce regulation that works for everyone. So quite keen to follow that path in Ghana and see how it develops.
Thank you, everyone. I'm sure Atta from UNCDF side will also answer this question about regulation and how UNCDF could eventually support providers in this regard. But let's continue maybe with the questions for you. There is one specifically for Shil. Could you maybe explain more your profitability strategy for Ghana?
Yeah, sure. So I mean, if you think about the crowd lending model, and what it tries to do is produce a return for the investors coming in. The two key factors in that model are the ones that we usually have control over, are the rates of interest, for example, that we charge the entrepreneurs, and how do we keep the repayment levels high. So those are the two key players that we have, and our teams within Pezesha are fully focused on trying to keep interest rates low, because that in turn means that the repayment probabilities are higher, and also to make sure that repayment numbers are high. And this is where a holistic approach of financial education comes in. How do we help these businesses, not just give them money and say, here, go ahead and do what you want with this, but how can we show them that, you know, this is how much you need. You don't need all this money and spare cash sitting on the side. You know, this is how you need to think about your business. This is how you can get more customers and so forth. So it's this holistic approach that we use that really enables us to drive that profitability and that return for the investors.
Ariana, I can probably add,
yes,
no,
sure.
I agree with what she shared. And the other side of that, to be sustainable, you need a great team, a great product, and of course, to keep your costs low. And so to get those lower costs, it's really investing in the platform, in the technology, to be able to do some of these things at scale. So of course, those things can take some time to get off the ground and to build, but once the momentum has started growing, then really that profitability is out there.
Thank you very much. Next question is around investors. If you can share the investors that you had so far on the platform. And maybe here I will add if you can share your findings or your experience with diaspora. As another question was from a colleague from IOM, and he was interested to know more how diaspora can access and benefit from this kind of platform. Thank you.
For us, I mean, we're still young in Ghana, but our experience in Kenya, we have lots of individual investors, in a couple of hundred or so, and we have a few institutional investors as well that we've onboarded, and their support so far has been quite sufficient to be able to serve the MSMEs within Kenya. We're looking to tap into similar sorts of networks or types of investors in Ghana, and certainly diaspora organizations are one we're looking at. And I've already been speaking to a couple of diaspora organizations in Ghana, and we'll be very keen to have that conversation with them to see how they can also provide the support within this crowd lending platform.
And Ariana, I can share some insights. So we also engaged a diaspora for our market research report. And we found that some of the projects that they would be most likely to fund were around sensitization and education, supporting job creation, and PPE for health workers. The most popular donation size from the diaspora was between $1 to $50 US at 40%. And then the next highest was actually, the next was a split between $50 and $100 and $100 and $200. We did ask an interesting question also to the diaspora about what kind of information would they want to see before providing financing to an entrepreneur. 84% indicated they would like to see a business model. 68% indicated they would like to have a better understanding of the target market, and 40% indicated they would like to have a conversation with the team members before providing financing. So these are all factors that we are now incorporating into the Crowdfrica platform to make sure that it's appropriate for diaspora also.
And for me, I can just say that from experience, whether you're donating or whether you're investing, it's always an emotional decision. And so it's not something that strangers without any affiliation will come on board to support. So we try to work as much as possible with closer networks, so that can be friends and family, and then reach out to diaspora and those who would have an interest in Gambia and whichever region the campaign might be. So it's about first unlocking the immediate network, building that momentum, and then attracting other people to join the cause and to see that there's actually hope and promise to come with it.
So Ariana, we have about just a few more minutes left. Maybe we can just take one last question, and then we'll close out the discussion.
Yes, sure. Maybe last question for the panelists. Then I would like to share maybe a few questions for UNCDF. For the panelists, if you can share the rate of default and payment incidents regarding the financing of youth SMEs and how you mitigate that risk.
So from our end, we haven't actually started yet with the loan financing product. So once I do have some data on that, I'd be happy to share.
I think I'm kind of the same. We don't have the data from those investments. We do have the rewards that we've been offering in South Africa, and it's a high percentage. I don't know the exact figure, but at least we know in theory that because people have supported the vision, actually the entrepreneurs are very happy to repay or to give what they have promised during their campaigns.
Yeah, for us, we don't have any numbers in Ghana, but in Kenya, what we've seen is using our supply chain approach, where we're leveraging off this relationship the merchant has with the supplier. We've seen very, very low default rates, very high repayment rates. probably, as low as in the very low single digits.
Thank you very much. I'd like maybe to share one observation from one of the attendees. So his comment is around how to incentivize potential funders into such platforms. So he's suggesting financial innovation and technical assistance. For example, using guarantees, obtaining purchase orders, connecting youth to corporate and diaspora mentors, working in a global or local supply chain to vet an idea, entrepreneurs. He's saying if you don't have at least 2 of these, he doesn't see the current state of crowdfunding scaling up. I don't know if you have any comment on that.
I can agree, and I think it's a matter of really, well, I think Tala might have mentioned it before, the lean approach. It's how can we run a series of tests and work with many different partners to figure out what these innovations might be in order to build these models that can work and help crowdfunding to scale. So I can't add much beyond that. I think ask us all in a year's time and we might have some answers, but for now, nothing concrete.
Yeah, Ariana, I also think this is a great point. So it's one thing to receive funding on a crowdfunding platform for your idea, right? But it's another thing to be able to effectively use that funding in the most productive way. So complementing the funding with our training program, I think is really critical for the success of our project and the success of the entrepreneurs' businesses. And then also in terms of financial innovations, complementing the training with potential access to a loan facility just kind of sweetens the deal. So definitely agree with me here. I think those are great points to keep in mind as we're designing the solution. Thank you.
Thank you very much. Thank you to all the panelists. Now the last question is more for UNCDF, and I'll pass the floor to Atta for closing the webinar. The question is about the role of UNCDF in providing technical assistance on appropriate regulations for securities-based crowdfunding in Ghana and Gambia, but I guess it can be extended to all countries of UNCDF intervention. Thank you.
All right. Thank you very much. Thank you very much to the participants for the questions. They are very, very intriguing and interesting. With regards to regulation, yes, this is an area that UNCDF does plan on working on. For example, in the Gambia, as I noted earlier, we do use a market systems-based approach, and we are currently working with the Central Bank of the Gambia on their national financial inclusion strategy. And this is a particular topic that is of interest and that we will be exploring with them further. Right now, we're in the midst of finalizing this draft, but the work that we do with our partners at the macro level does very much focus on technical assistance and ensuring that these innovative mechanisms that we're introducing is also coupled with the necessary regulatory needs for these types of systems. Now, with that said, I know there are plenty more questions and a lot of interest with regards to crowdfunding and how UNCDF is working in the area, not just with partners, but with regulators and others and other key stakeholders. And that's why this is going to be a multi-series a session that we will have over time. By the time we host our next session, we will hopefully have more results on the ground and be able to dive deeper into some of the discussion points and questions that were raised. And so that is our time. If you can just bear with us for one more minute, just last thoughts from our panelists. Again, thank you for your time and sharing your models and such. If you can just share last thoughts with participants, for example, some of the challenges you foresee, and then we will close out the session.
Sure. Well, I can go ahead and start. So maybe instead of some of the challenges, I think, the nature of this project is around crowdfunding. And as I mentioned, we are currently designing that loan product. So I think it would be cool to also crowdfund solutions. So if anybody has any ideas for how we can design this loan product to meet the needs of the risk levels of financial service providers, but also get entrepreneurs the levels of exposure that they need to be competitive loan applicants, I am more than happy to hear your thoughts. And of course, thank you again to Atta at UNCDF and also for all of you for your time.
Thank you, Tala. Yeah, in terms of challenges, I guess at this point, there's so many unanswered questions. It's a very new, innovative space, and it's going to take a real collaborative effort to figure these things out, which is why we're very happy to be working with UNCDF on this to hopefully get some answers to those and actually to see more activity in the region. Beyond the people here, like I expect to see other platforms emerging, other models being tested. And so we're just excited to see what the future holds for crowdfunding. We know the World Bank has released figures that show it has a huge potential. But if we look at the reality, it's still in its infancy stages. And so we need to think about innovation. We need to think about locality as to what challenges are going to come up and how we're going to address them.
Thanks, Matt. And yeah, I think we talked about some of the challenges when we're talking about some of the risks we think we'll face. And for me, the biggest challenge is we're going to expect about 1 million young people to enter the working age group every month in Africa. And if you think about these 1 million people, only about a quarter of these get jobs. So you can imagine how quickly that problem continues to escalate. So if you can find ways to support these young people who get left out of jobs, like the various crowdfunding models to give them access to finance which they would otherwise have a really hard time obtaining, then you're kind of on the right path. And crowdfunding has only been around for a few years, so it's fairly new. So it's fairly new compared to the more traditional sources of finance. And if you consider the environment for crowdfunding right now, it's drastically improving. More and more people are getting access to the internet. More and more people are getting access to mobile money payments and so on. And so I think more and more people and institutions are going to start thinking about and using crowdfunding. And I think crowdfunding models can begin to support MSMEs in ways other than financing. For example, we talked about the education piece so that they can make better decisions. But they can also start thinking about how they can offer market linkages, such as access to more customers, access to better terms from suppliers, and so on. Then I believe what we shall have is then we shall really see these MSMEs thriving. Thank you.
Thank you to all the panelists, and thank you again to all of the participants. That's all the time we have for now. We will be sure to share the presentation with you, of course, and if you have any questions, please feel free to reach out to us. And hopefully we'll see you in our next webinar, which will be shared in the near future. Thank you again and have a great day.
Thank you.
Thanks, everyone.